First, let's talk about good news. It appears that shorters were dealt another massive blow this Monday, with a reported $512 million in losses for all of those who betted against AMC. Anyone who gets caught shorting this stock will continue to lose money. Over the past couple of weeks, especially with AMC rallying up, the losses have accrued and totaled in the billions of dollars in losses. A notable change in the repo market came from an increased operational cost from the Fed amounting to over $520 billion today alone. Regardless whether this causes a stock market fall or if it continues moving it higher and higher, both ends lead to the same outcome in my opinion, and that is a squeeze for GameStop and AMC. Dark pool trading account for around 60% of the total volume AMC had today, while accounting for a little over 46% of the total volume for GameStop. I caught something interesting today. So infamous Motley Fool has been writing article after article for the last couple of days, giving a lot of clout to CLOV stock, which as previously discussed, was a pump and dump stock with Citadel owning a significant portion from it. Well, now that the stock is going through the dump phase of the cycle, it appears that Motley Fool is now completely trashing the stock, noting how the stock is under federal investigation. Funny how they knew about this before pumping it up, but now that it's going down, they jump in. I mention this to bring to attention how incredibly deceptive the media in general is, and how regardless of what you hear about GameStop or AMC, you should not take their information as credible. We have discussed how the Motley Fool has had connections with hedge funds themselves, so this doesn't surprise me in the least bit. So, there was a lot of talks happening yesterday and today regarding a set of news from Citadel Securities Luxembourg. The big deal was that the company dissolved on April 30th this year. Many people started singing praises and celebrating as if this was an indication to the current financial state of Citadel. I took opportunity to look into the matter closely and came up with a different opinion. For those that don't know, Luxembourg is tax haven that serves for companies to establish subsidiaries or shell companies in order to avoid having to pay taxes. Looking through the SEC website itself, it appears that Citadel Securities Luxembourg is indeed connected to the infamous Citadel Securities that we have talked so much about on this channel. However, the thing is that upon closer reading of the dissolvement of the Luxembourg company itself, as far as the evidence I found suggests, is nothing special. It is a well-known fact that many companies are built and then dissolved once they serve their purpose. There is no empirical evidence to suggest that the reason for their dissolvement is tied to a lack of financial means to keep its business afloat. The company had no outstanding shares, no real estate or other essential assets. I find it ridiculous for people to start placing dots together when they don't even care to read the document itself. The dissolvement of tax haven companies is standard procedure in many cases. They open and close shop immediately after they serve their purpose. What happened with Citadel Securities Luxembourg to me is the exact same thing. I am currently working on a big DD drop for tomorrow. I thought I would have it ready for today, but that was not the case. I will spend the rest of the day working diligently to bring that to you guys tomorrow. Before we start talking about technical analysis and recap on the performance we saw for GME and AMC, let me state that I am not a financial analyst or advisor, and all opinions are subject to my own interpretation of the world, unbiased by corrupt money like otherwise would be the case for a politician. AMC had a pretty eventful day. It began with quite a bullish pre-market, running almost to $60 before the stock for no apparent reason started dipping. Now, we know that AMC shareholders are strong in their conviction, so a retail sell-off of this proportion is nothing but an orchestrated set of attacks from Wall Street. Upon market open, the stock had a small rebound before continuing its descent to slightly below $52. Now, the good thing here is that AMC found a bit of a floor and started consolidating at around $53, which was pretty bullish. It maintained trading around this price more or less throughout most of the day after that initial dip attack. Around the last hour of trading, the stock had a bit of a rally, bringing the price up to 55.86. The stock then consolidated a bit and closed at 55.18. I don't doubt that tomorrow the stock will be attacked yet again, but I consider today to be a strong victory for all AMC holders. They really tried to get the stock to get weak enough in order to dip it below $50, and that didn't happen. In fact, the stock closed around $1 below yesterday's closing price, which marks a huge failure from shorters themselves in being effective to weaken the stock for successful vertical dips that break support barriers. I don't think it would be out of this world to think tomorrow we could retest $52 again, but nothing is certain. This last hour rally showed yet again that AMC still has a ton of momentum going for it. The fact that we also finished above the VWAP says the stock wants to move upwards. It will be really interesting to see how we close out tomorrow, but as for today, we had another major victory, bringing the score 3-0 this week in our favor. So far, there are 426,740 in the money option calls for AMC at the moment. I am in absolute love with this number, because if we are able to keep trading as we have been, it implies just how deeply screwed hedge funds and other shorters will be. Now, GameStop was the real price today. This stock began pre-market very bearish before having a bounce up upon market opening. The stock then dipped again, moving below $210 before bouncing and breaking major resistance at $218. The stock consolidated a lot around $214, building support walls there. However, things got really interesting around the last 2 hours of trading when GME broke past that 217 resistance wall and started climbing. It didn't shoot up, instead progressively moving up until the last 30 minutes of trading where the stock went vertical and ran to 228.73. The stock then was attacked and closed at 222.97. Ending and closing so far above the VWAP goes to show how suppressed this stock has been. It is a great opportunity to buy GME at these levels because I believe it is slowly cooking for another huge run. The stock is in my opinion massively oversold and is due for another run. With that said, I want to thank all of you who have supported me and my channel. Thank you for liking and sharing these videos, and a huge shout out to all my Patreons and other great folk who donate to the channel. These funds have helped me maintain and improve a lot of the equipment I have and gives me that long-term longevity to keep pumping out content for you. YouTube pays me scraps because of the robot voice and it's biased against our rise in the world, so you guys making up for that is just amazing. One thing before I leave, and that is to stress again. Regardless where we end, the 40.01 price is just the price for a ton of in-the-money option calls that expire this Friday. If we end up above it, it would deal a blow to hedge funds. But regardless of whether we do so or not is not a huge deal. I hold regardless because all it would do is raise the floor as I have said so many times in the past couple of videos. This is not the short squeeze. Keep holding because once we lift off, there is no jumping in on our train. As such, thank you again for making it to the end of the video. Let me know in the comments below if you liked the video and I will see you tomorrow, so enjoy the rest of your day.